me bring in David Blanchflower. Nice to bring the church bells here right on 12 noon Q.
Absolutely. Great to be here on a lovely day. Welcome.
It is a remarkable day. It's the end of the year. Let me cut right to the chase. Do you teach economics differently now than you did in 2006?
Yes, I absolutely do. I teach the students about the fact that much of economics failed. We've had the greatest financial crisis in 100 years, and it's time to rethink. So that's what I teach them, and we watch every day. As you said to me this morning, every day it's different. Every day there's news. This thing is not over.
Your book in the 90s, The Wage Curve, was widely acclaimed. I believe it won the Lester Prize at the time. The wage curve, where's the wage curve right now? There is no wage growth, is there?
Well, there is no wage growth, and actually the evidence, in fact, is the wage growth fits the data pretty well. Approximately, the law said that as unemployment doubled, real wages will fall by 10%. They've actually fallen by about 8.5%, so it was pretty well on cue. But what we've seen is rising unemployment, fear of unemployment, and falling real wages, as we would have expected. So that's a big story here, and that's in a sense why these inflation increases haven't had second-round effects. There are no big real wage effects, so the Fed can sit pat and not raise rates.
They can sit pat. What do Lacker, Plosser, and Honig, what do they get wrong? You're on the other side with Dudley and Bernanke and Yellen, aren't you?
Yeah, I absolutely am. I see this as a new world, the world of the 1970s, when you had to respond to these oil price shocks because wage growth was going to increase. That's the new world. The union power has reduced. We see no evidence of wage growth in Europe, in the UK, or in the US. If we do, then it will be appropriate to raise rates. But right now, you have to keep rates low and keep QE going. And if the situation worsens, no growth, we do more QE.
Let's go to the United Kingdom. Dreaded first chart, Rex, if you could bring it up here, folks. It's UK inflation, and it's just real simple. It's higher there. Mervyn King has to write a letter. Have you ever written a letter to the Chancellor of the Exchequer?
Well, I have, actually.
Were with the Bank of
England?
Yes,
I absolutely did. And in fact, the letter, Mervyn King writes the letter, but it's actually a letter from the MPC. So I was one of the letter writers. He just signs it. The MPC does it.
Do you use a quill?
Well, we have, yes, I guess we do use a quill. But yes, the inflation in the UK is temporarily very high. A good part of it is because there is a national tax called the value-added tax. And in January, it went up from 17.5% to 20%. And that in itself raises inflation by 1.5 percentage points.
Do we need a value-added tax to go from 17.5% to 20%? That's a conservative's fear here in the United States.
Well, that's a conservative's fear, and that's what the Conservative government, the Conservative coalition government did. And we're going to talk to Ed Balls, who's the opposition spokesman, and his view is that that was a mistake. So there is a debate in the UK, but the Conservative coalition government just increased the value-added tax, and a few weeks ago it also increased payroll taxes.
Too much information. Rex, bring up too much information right now. I mean, it is too much information, and it's about wages. I mean,
right.
It's just, I mean, that's the theme today. It's a new and difficult just glide path. I mean, how do we boost wages? How do we boost economic growth?
Well, I think we have to. Obviously, I've said we keep the stimulus going from the monetary authorities. But I'm a tax cutter. I'm of the view that we need to give private sector firms tax cuts, investment incentives, and investments to hire people, because the economy on its own is not going to deliver the jobs that we need. So we really have to help firms and stimulate hiring.
I mean, and I want to take some time here on Dartmouth, as we're 2 days here, folks. Really looking forward to this with Alan Blinder today and Edward Balls, formerly with Gordon Brown in the United Kingdom. That austerity view and debate, heated debate in the United Kingdom. The consultancy Booz Allen called Dartmouth an enduring institution. That's like a jargon alert right there. What is an enduring institution, and why is that Dartmouth College?
Well, we're an Ivy League institution. We're a land grant institution. We have 36,000 acres of New Hampshire, and
what do
you do with it? We grow trees on it, and we use the trees to help them to build our new library. We send the students there. They come here. Freshmen come here, and we send them off on our trips there. But we manage those acres. This is an institution that has endured.
Critically, junior year, you're taking the dreaded Blanchflower advanced macro course. You're getting hit over the head with differential equations. Is it better to do that in Hanover, New Hampshire with no distractions, or do they need to seek peace in Cambridge, Massachusetts?
Well, I guess what you'd expect me to say. I think actually the undergraduate education at Dartmouth is the top one in the world. I think the quality of this education is fantastic. It's great training to go on to PhD programs everywhere else. Shameless plug, but I agree. But you asked me. No, I think it's a great undergraduate education, and it's great training to go and do a PhD or an MBA, even at the other places.
We're going to go to break here. You've been here 23 years. The Queen of England, when you last met with her, said, "Wait, are you American?
I know.
Are you more American, or are you still British?"
Well, I'm actually probably more American, but surprisingly, I haven't lost the accent. I don't quite know why my kids speak American, but I still speak the Queen's English. Okay. Unlike some other people.
John Lipsky has talked about coordination, his macroprudential, his tenure. What a time to jump into the IMF, as John Lipsky did.
Yes, goodness me, what a time, and a great time to be a central banker. I was thinking if you study volcanoes, you don't really want one to happen, but when they happen, you're really, there's the demand for you. I'm a labour market person, and now unemployment rises. This is astonishingly interesting and important, and how do you get unemployment down? How do you prevent us going into a depression? That's been the most important work for economists for 50 years.
I introduced John Lipsky 2 years ago, I'm thinking, at the Council on Foreign Relations, and every speech is about a need for coordination. Is that political talk, or is there actually economic proof that nations can be coordinated?
I think there was some evidence of it. I think there were two really important global attempts in the recession that really helped. The first was in October 2008. 4 central banks got together and made a rate cut together. The ECB, the Bank of England, the Fed, and the Swedish Central Bank, and I think the Swiss, 5 banks. That was the first thing. It was a big move to show everyone was in it together. And then the G20 meeting in the spring of 2009, where essentially countries got together and said, we're going to put $1 trillion of stimulus in. Perhaps you might think that the troubles we're in are because that consensus has broken down.
You look up, bring up elegant chart 1, if you would, Rex. I think it's important to bring this up. Here's the behavior that's there, and it's something everybody in New England. The white line is U.S. unemployment, and the yellow line is New Hampshire unemployment, and it's pretty good. And it's just about Massachusetts. I'm moving to New Hampshire. The taxes are less. Can you blame politicians that they don't want to raise taxes?
Well, I understand that they don't want to raise taxes. I think at the moment, what saved us all is the stimulus. I mean, New Hampshire is a state that has no broad-based taxes. It's a good place to do business, but at the moment, we really have to worry about keeping the stimulus going. And my view is you need to cut taxes to firms. You need to give them investment. The problem we have is maybe we have the balance of taxes wrong. And New Hampshire,
do we need
live
to make
free
a
or
broader
dies.
tax base? A broader tax base, not raise the rate as Martin Feldstein suggests?
Well, maybe we do. I mean, I just think the view at the moment is we've got to keep the stimulus going. That's the number one priority. And as Bernanke's been saying, it's sensible to try and rewrite that tax code. It's so complicated. We need perhaps to think about new taxes. Maybe, as Blinder said, we should think of an energy tax or even perhaps a land tax. I don't know. But the changes need to be done.
Will we see QE3?
It's path dependent. I don't rule it out.
I love path dependent. Talk about jargon. Put up a massive jargon alert. It's path dependent. What information are you looking for along that path? Is it GDP?
Yeah, it's really GDP growth. It's really what happens to unemployment. Are firms hiring again? If they're not, and particularly how much of this stimulus is actually being driven by the QE itself? If the answer is once that stops, and it turns out a great deal of it has been by the change in the stimulus, and then the economy slows, then there's an argument to do it again. So, and I think the Fed has not ruled that out. So the question is, how much of the activity that we see is actually driven by this QE that we have already? Don't know the answer. And neither does the Fed.
30 seconds, and we'll come back tomorrow and do this again. Did Dartmouth freshmen really go off in the wilderness when they come here?
They certainly
do. They take Pabst Blue Ribbon with them? Or
yeah. Well, they go on what's called freshman trips, but it depends on their experience and how brave they are. Some of them they send up the Matterhorn, but others they send on sort of gentle little streams.
And others go down to the Hanover Inn.
Us guys would have watched them go up there and gone to the Hanover Inn, right?
Very good.
That's our plan.
Well, we'll do this again tomorrow.